Good morning, traders, and welcome to BCI's morning market analysis. Global sentiment remains finely balanced as attention turns toward trade negotiations, central bank decisions, and geopolitical tensions. So let's dive into the key developments shaping today's outlook. First up, let's have a look at the DXY. The US dollar extended its rebound on Thursday, climbing above the 100 mark to a high of 100.76. This move came as progress in trade talks between the US and its major trade partners, including a likely US UK trade deal, lifted investor sentiment. Fed Chair Powell maintained a cautious tone after holding rates steady, citing risks to inflation and employment, but pushing back on the idea of a precautionary rate cut. Technically, the DXY has turned short-term positive, with the MACD flipping into bullish territory. Despite this, the broader trend remains downward, having fallen from a high of 110.18 earlier this year. Resistance sits around 100.21 and 100.75, while support lies near 99.6 and 99.23. The RSI remains neutral, indicating room for movement in either direction. Next up, let's have a look at WTI crude oil, which jumped nearly 4% to close on 59.95 on Thursday, buoyed by renewed optimism over upcoming US-China trade talks and the news of a US-UK agreement. However, potential increases in OPEC output and geopolitical developments, including Iran-related risks, could limit gains. On the technical front, WTI has struggled to hold above the psychological $60 mark. The RSI and MACD indicate weakness after 3 days of declines, suggesting the current rally may be fragile without new fundamental drivers. Resistance remains at 60.52 and 61.8, with support at $57 and 56.79. Next up, let's have a look at gold, which extended its pullback on Thursday, briefly touching 32.88 before recovering to around the 33.05 mark. While uncertainty in US-China trade relations helped stabilize the metal, the Fed's steady policy stance and Powell's resistance to rate cuts weighed on demand for the non-yielding asset. Technically, gold remains in a bullish bias as long as it holds above the key $3,300 mark. Momentum indicators remain positive, and a push beyond the 34.39 mark could see a retest of all-time highs of 3,500. On the downside, a break below 3,300 may expose gold to deeper support at 32.65 and 32.23, and the psychological level of 3,200. Lastly, let's have a look at the Australian dollar, which saw some modest gains early Thursday, rising towards the 64.50 mark before retreating to 64 cents. The pair had surged to a 5-month high of 65.14 earlier this week, buoyed by optimism over China's stimulus plans and potential trade breakthroughs. The Fed's firm tone has kept the US dollar supported, limiting the Aussie's upward momentum. Technically, the outlook remains constructive, with the MACD and CCI signaling bullish bias. RSI sits in neutral territory, while price action remains supported above the 64-cent mark. Resistant levels are seen at 64.75, 65, and 65.28, while support is near the 64-cent mark and the 63.75 mark. While the markets are delicately poised between optimism over trade progress and caution over central bank policies, keep an eye on upcoming diplomatic developments and key levels across major assets, as they are likely to shape the next significant moves. Wishing you a productive day ahead and happy trading.